I remember, I don't want to out you on this. I think early on you were not necessarily a believer in the WeWork model, and then over time you became more of a believer in the WeWork model, and I want to understand where you are now.
I'm a little conflicted on this, so I'll do it. I talk about what I can. First of all, I think it's a business.
What's your conflict, by the way, just so we understand?
We're involved.
You're involved in this situation?
Yeah. So, but let me
Even
tell you,
better. That was Starwood Capital's Barry Sternlicht last Friday, guest hosting on the show, and we know a little bit more now about how Barry is involved. Reports say that he is one of the backers of the J.P. Morgan rescue package for WeWork, but sources say WeWork expected, though, to accept SoftBank's offer to buy a controlling stake in the company. Joining us right now is Axios business editor Dan Primack, and in Tokyo this morning, David Gibson, chief investment advisor at Astris Advisory Japan, with an outperform rating on SoftBank. I'm going to get to Tokyo in a second, but Dan, you broke the other piece of news yesterday, which is part of this SoftBank offer. They're going to pay a separate $200 million payment to Adam Neumann, the CEO or the former CEO who's being kicked out of there. So
yeah, it is, and not in legal terms, it's a bribe, basically. Adam Neumann still controls the vote at WeWork. He still has the 10-to-1 voting rights, not the 3-to-1 it was supposed to change to. I can't quite understand why. Maybe they literally just didn't get the paperwork done. But either way, Adam Neumann, and particularly when you add in SoftBank's stake, they control the votes, and he's basically being paid to vote for SoftBank's deal, give up his voting rights, give up his chairmanship.
Is there any chance that other shareholders could sue?
Well, obviously, shareholders can always sue. Shareholders probably will sue. You could see employees maybe who have had the value of their stock wiped out, maybe see them sue. Absolutely. But remember, if you're Adam Neumann, $200 million for Adam Neumann is a little different maybe for $200 million for you and me, because I assume, Andrew, you don't have $700 million of debt sitting on your books.
Well, that's part of his problem, and I imagine the reason that SoftBank needs to offer this amount of money to get this deal done. I want to go to David in just one second, but I have one quick question for you, Dan, which is, my understanding is there's going to be layoffs the second this deal hits the tape, including 2,000 people, some of which they weren't prepared to lay off earlier because they couldn't pay the severance.
I've heard that as well. I haven't been able to confirm that. On the layoffs, though, I think it's going to be really interesting because there's an outstanding question of who the CEOs will be. Maybe not at the end of today, but definitely by the end of the week. It is unclear if Artie Minson and Sebastian Gunningham want to stay at the company. SoftBank wants them to stay. They might not want to be there.
Okay, David.
And by the way, and if that's the case, who has to do the layoffs?
Exactly. David, help us understand. You like SoftBank. This transaction unto itself might be described as not a takeover, but a take under, given the fact that they've put now more money into this company than the company's valued at.
Yeah, absolutely. I mean, Musk has made a mistake, clearly, right? And he's invested. He got too much money invested, overly spent on WeWork, and here it's all gone belly up. But he's in a tough situation. Is it a real business, as you played at the start of the thing? Look, I mean, reality is it probably is. Shared office space, is a real business. Ultimately, they have a lot of space, obviously, in Manhattan, as you know. I think it's 1% or so of the office space here in Tokyo. And so it is a real business longer term, but obviously expanded way too fast and too much of a drag. And that needs to be fixed. And I think that's the point of SoftBank's move here, is saying, you know what, in the end, there's probably assets here that are worthwhile having. Why not rescue it? Unfortunately, it is bad money after bad from before.
So
that's the problem.
You look at this, if the value of the company is $8 billion, by the end of this, it looks like they will have something like $13 billion of their own money into it. Is there any model you see that, I don't know, 12 months out, 24 months out, 36 months out, you get to even, or do you get to green?
No, to be blunt, as per Dan's comment, well, for WeWork, obviously, I think it gets worse, right, is the point. There's restructuring costs and everything. Right. For SoftBank to be ahead, which I think is what you're alluding to, no, I think it's probably going to take 18 months plus in reality. But the good news is, relatively for the Vision Fund, this was 13% of the fund. Now it's going to be 6 or 7%, right? And so Musk made a bad bet. He put a third of the fund in 3 assets, and one of them's gone bad.
Hey, Dan.
There's lots of other investments in there.
Dan, what are the implications for the Vision Fund, for their ability to continue raising the second Vision Fund? This is a second $100 billion fund, and how founders and the rest of I want to say the Valley, but obviously WeWork is outside of the Valley, is going to be viewing the Vision Fund and SoftBank as a result of all this?
Well, there's a few things. One, the money, my understanding is the money SoftBank is going to put in now that'll get announced today or maybe tomorrow, that's going to come off SoftBank's own balance sheet, kind of like its most recent, that $47 billion valuation. That comes out of the company. But what it does for Vision Fund, and the problem is it does now officially revalue Vision Fund's original stake, and in the negative way. They're having a hell of a time raising this. As of yesterday, Massa wouldn't even confirm whether or not, for example, he's going to that Saudi investment conference, which is in less than 2 weeks, which is where he needs his big chunk of money from. I think for founders in the Valley, though the math probably still stays the same, they don't like SoftBank Vision Fund. They don't really want to take their money. But if that money appears, if they're able to raise Vision 2 and they get offered it, they probably still take it.
And to the point that I don't know if you saw the top of the show, Joe made a point about, do you ever really want to buy into an IPO? Do you think this sours the IPO market in a meaningful way? Do you think people look at this as one idiosyncratic issue and sort of problem child of a company, or do you look at this and extrapolate out?
I think it's problem child of a company. If you look at the IPO numbers for the year, if you look for the year, including the venture-backed IPO numbers, even the big unicorns, obviously there have been some that have struggled. Uber, Lyft, and this WeWork thing is a disaster. But there have been plenty of companies that have come out and done well. I do think it has changed a little bit, consumer versus enterprise, even though WeWork is technically an enterprise company. But in general, I think companies can still go public. But if you've got massive losses and big governance issues, that's kind of what this shows here. The one other thing I'd say, Andrew, about this, which I do find interesting, is, for all of his problems, Adam Neumann, prior to the IPO, was willing to give a lot on governance in order to get the IPO done. I would not expect to see any other founder do that again, because they'll realize what happened with Neumann is he lost his job.
Though. I mean, giving a lot from a ridiculous perspective.
It was, but the idea was, give up on the governance, let us be able to fire you as CEO, and then everything will be better. He does that, and 2 weeks later he's out as CEO. I'm just putting myself in the mind of another founder. If they get offered the same deal, they'll look at WeWork and say, no thanks.
Right. Dan, my point was that it is a Wall Street credibility issue. You got the best and the brightest in the IPO business, and they value something at somewhere between 8 and 47 billion. I mean, they have no idea. They had no idea on this. Why should we believe them when they assign a valuation? Anything, if the very best firms, J.P. Morgan, whomever, and they go, we're looking at pricing this at 20, which would give it an enterprise value of 47 billion. Oh, never mind. It's more like 7 billion.
By the way, Joe, I agree with you on that. But that's always been the case with IPOs, right?
Yes.
Stock comes out at 20, and there's huge headlines. It pops to 40.
They didn't know that either. Sentiment and froth like everybody else, and they want to get the best price they can, I guess. But I mean, it just. Go in with eyes wide open if you're an investor. They don't know. They don't know when they're pricing these things, what they're worth.
Hey, David, you're right. By the way, they're also selling it to the companies, right? 47 billion, that gets you the underwriting job as opposed to the person who said 40.
Right. Hey, David, before we let you go, just speak to the issue of SoftBank versus the Vision Fund, when they're using the Vision Fund, when they're using SoftBank. How should shareholders that are invested in SoftBank think about that? Because it seems like sometimes when there's been trouble with a troubled investment, the money seems to come out of SoftBank proper as opposed to the fund.
Yeah, look, 2 points on that. I think everyone gets caught up on exactly SoftBank's putting the money. Almost all the investments that Vision Fund's done have come from SoftBank first, and then they've shifted across, subject to various regulatory approvals and the investors themselves. So I wouldn't get too caught up about that. The reality is SoftBank Vision Fund 2.0 is probably dead at this in the next 6 months. This money that is obviously going into into WeWork, really probably stops Vision Fund 2 being set up. That's probably a good thing for capital markets overall. To your point overall, I think you were asking earlier to Dan, I want to say one quick thing was that I think actually this IPO and the failure here is a notice to all founders that if you want to come to market, you better have a business that really works, that is clear, that is corporate governance is strong. You have a path to profitability, and the amount of disclosure is excellent. And if you're not doing it, guess what? It's not going to fly. And that's a good thing about the capital markets. It's actually sorted that out. And I think ultimately we'll see Vision Fund work in the sense that it has 80+ investments of $70 billion invested. Investing in tech longer term, as we know, is a good thing. It's not all tech completely, but I think ultimately it does work. We've got a massive hangover in the short term, unfortunately, and it probably takes 6 months before this all gets sorted out. But longer term, the stock is at a significant discount to asset value.